We are one shock away from a major market shift. Trump's tariffs, now being called Liberation Day duties, are back in play. And while investors brace for impact, Wall Street insider Tom Lee just made a bold claim on CNBC. He says corporate earnings may actually hold up, even in the face of rising costs and political chaos. So what does this mean for your money? And which stock stands to win big if history repeats itself? Today we're breaking down Tom Lee's surprising outlook on earnings, what the bond market's signaling that the headlines aren't, and the one overlooked stock that could skyrocket with the return of Trump's tariffs. If you're a serious investor thinking long-term, you cannot afford to miss this. Make sure to hit that like button, share this video, and subscribe so you never miss an update on gold, AI stocks, and the market moves that actually matter. Markets are shaky, inflation's not dead, and tariffs, they're back on the table. But here's what Tom Lee, co-founder of Fundstrat, told CNBC. It's tough now, better later. Long-term investors should not panic. Despite the noise, projected earnings for the S&P 500 are holding steady at $280 EPS for the next 4 quarters. That's no small thing, because when earnings don't collapse, neither do markets. Tom Lee's point? Don't make emotional moves. We've seen this before, in 2022 and 2023. The investors who stuck it out, they won. If you're a high net worth investor looking to protect your portfolio and build long-term wealth, I've got something for you. Download my free PDF guide, 5-Minute Money Shift, the no-fluff cheat sheet for growing wealth through AI, stocks, and gold. It's specifically designed for smart investors who want clarity in volatile times. Grab it now, link in the description. This is the kind of resource people pay for, but it's yours free right now. What makes this tariff round so tricky is the fog. Tom says even the biggest firms, Fundstrat, Goldman, JP Morgan, have no real clarity. Everyone's hosting tariff calls, and nobody knows what's coming in 45 minutes, let alone 45 days. This uncertainty is what drives fear, but the smart play isn't retreat, it's positioning, because long-term assets thrive when weak hands fold. If inflation were truly out of control or earnings were about to crater, the bond market would be screaming. Instead, it's whispering, high yield spreads steady, 1-year inflation expectations down 30 basis points. Tom Lee reads that as a signal. Markets may be jittery, but the fundamentals aren't cracking. Here's where it gets controversial. Tom points out that companies have stockpiled labor since 2020, holding on to workers they might not need anymore. Now, with AI accelerating fast, businesses have cover to cut costs, without making headlines. The result? Lower labor costs, better margins, even in a high tariff world. This is the kind of shift that catches most investors off guard. Tariffs do hit margins. No debate there, but the impact isn't evenly spread. Tom breaks it down. Giants like Walmart can push costs onto suppliers. Smaller players? They eat it themselves. This is why stock selection is key right now. You want companies with pricing power, supply chain control, and tariff-proof models. Which brings us to Nucor. With Trump's trade policies, Nucor Corporation is one stock you should be watching very closely. Why? It's America's largest steelmaker. It benefits directly from tariffs on foreign steel. And history proves it. During Trump's first term, Nucor surged. Let's look at the fundamentals. Current price, $123.30. Earnings per share, $8.42. PE ratio 14.6. Fair value estimate, $221.54. Dividend yield, 1.77%. That's over 80% upside if steel demand shifts back home. With infrastructure spending up, AI demand for hardware climbing, and Trump's tariffs, NUE is perfectly positioned. Now let's talk about a company that's directly in the crosshairs of this moment. And I mean that in the best way. Nucor Corporation is the largest steel producer in the U.S., and with President Trump officially launching his Liberation Day tariffs, this stock just got a lot more interesting. These tariffs aren't just political noise. They're part of a bigger economic strategy. Trump is making it clear. The days of cheap foreign steel flooding the market are over. And companies like Nucor? They're built to thrive in that environment. Let's break down the fundamentals as of this week. Stock price, $109.79. Earnings per share, $8.42. PE ratio, 13.0. Still undervalued compared to the sector. Dividend yield, 1.77%. Fair value estimate, $221.54. That's a potential if tariffs lead to what many analysts are calling a Made in America metals revival. This is why it pays to think ahead of the curve. When policies shift, so do winners. and Nucor looks positioned to benefit from a renewed push for economic sovereignty. This isn't just a trade setup, it's a macro trend, and for conservative investors who believe in America First principles, this is exactly the kind of company that aligns with your values and builds your portfolio. Now before we wrap, let's not forget one of the most time-tested America First ways to protect your wealth. When tariffs rise, currencies get volatile, and global supply chains shift, gold doesn't flinch. It holds value, defends purchasing power, and acts as your anchor. And here's the truth. Smart money isn't waiting. We're already seeing quiet accumulation from institutions, central banks, and high net worth investors. Why? Because when the world gets chaotic, gold gets strong. If you believe in sovereignty, strength, and long-term wealth, think about adding gold to your portfolio. So what's the bottom line? Tom Lee says don't panic. Earnings are stable, inflation is cooling, and AI could quietly protect margins. Most importantly, position now, while others are waiting for clarity that may never come. Before you make your next move, download my free guide 5-Minute Money Shift. This is your roadmap to navigating volatile markets with clarity and confidence, especially if you're serious about building real generational wealth. Download it now, link in the description. If this video gave you clarity, smash that like button, drop a comment with your thoughts on Tom Lee's take, and subscribe for more smart investing breakdowns every single week. Stay sharp, stay invested, and I'll see you in the next one.